firstly, what is it that Omidyar does?
So Omidyar is an impact investment fund. Omidyar invests in 5 key sectors across Africa. Financial inclusion, what we call SIM, consumer internet and mobile, which is basically the internet economy, education, government transparency, and then entrepreneurship. But entrepreneurship more as a sort of enabler to sort of economic development.
How much uptake has there been, particularly when it comes to entrepreneurship?
As you may know, the venture capital space in Africa is still not very, very developed. And so we sort of leaning in a little bit compared to other investors. You have a lot of activity in Africa now in private equity and sort of the larger ticket items. But at the stage where we function, there's really a handful of firms that are investing at that stage.
And you've done a lot of research into entrepreneurship on the continent. Which are the key areas to watch?
We believe that there's a huge need in Africa to support the entrepreneurs at a stage where they've gotten out of the starting blocks. They have a sort of a proven concept, a proven business model, and they need capital, skills, support to scale their businesses.
And what kinds of support are you given?
There's basically 4 buckets of support that we've identified. The one is what we call entrepreneurial assets. And what that means is access to skills, access to capital, and infrastructure. What type of infrastructure is required. The second category is business support services and incubators. So basically the external support that entrepreneurs need. The third is around the legislative and regulatory environment. And the fourth is around the culture of entrepreneurship, as in how does a society looks at its entrepreneur and what sort of place and respect do they have in society. And our philosophy is that in order for entrepreneurship to thrive in any given country, all 4 areas of support or have to be sort of vibrant and dynamic. So you
mentioned the regulatory framework that exists in the country. Now, in South Africa specifically, that's often a big complaint that entrepreneurs say there's a lot of red tape. Is that something you're finding in other parts of the continent as well?
Yes, but paradoxically less so than in South Africa. There's been, the World Bank a couple of years ago started a ranking, a yearly ranking called the Doing Business Indicators that you're familiar with. And I think this ranking has spurred a lot of interest from the lawmakers around creating legislation and compliance requirements that are more conducive to small business. And so you find many leaders in Africa who are in charge of entrepreneurship, going out of their way to try and make things easier for entrepreneurs to sort of to function.
I want to start a business now, and you're at that level which you described. Which is the best country to be in?
Well, Rwanda has been cited as one of the countries that has some of the most pro-business sort of policies. Mauritius is also very often cited there as well. We're hearing very good and promising news from Mozambique as well. And then many of the other countries, as I said, there's a willingness from the authorities, but perhaps what's lacking is the deeper and engagement between the lawmakers and the private sector.
We spoke about the access to funding. We can't not talk about it because everyone thinks it's about funding, but it is important. And how onerous are those requirements?
People complain about the fact that the banks are too difficult to provide capital, that the bank asks for, tremendous amount of guarantees, sometimes 100% of the amount raised and things like that. And that's kind of an issue that needs to be cleared up straight off, which is that the banks are not the best providers of capital for entrepreneurs, period. And people keep banging on the bank, but without realizing that the bank primary focus is the fiduciary responsibilities that they have and primarily to the depositors. Whatever country you take, across the board, not just in Africa, not just in emerging market, and even in OECD countries, the rate of failure for small business is upward of 70%. Now, which means that 7 out of 10 businesses fail within the first 2 years of existence. Now, if you put your money in a bank and you put 10 rand in the bank, and the bank tells you, we can only give you back 3 rands because the 7 rands we've lost by investing in small businesses, you're not going to be happy, and that bank is going to close most likely. And so that's why banks are not prone to lend to small businesses. The second piece is that typically at a certain stage, when you're looking at investments of, say, less than $1 million, for example, most countries that have vibrant entrepreneurial ecosystem provide this capital through angel funds. So individuals, high net worth individuals, or very specialized institutions that are geared to providing capital at that stage of the enterprise. And typically, those individuals or institutions provide not just the capital, but a very involved amount of support to sort of guide the entrepreneurs and guide the enterprise forward. And these kind of angel networks, angel fund or seed funding are extremely deficient in Africa. Even slightly higher, above the 1 million ticket price for investing in entrepreneurship. Even there, the VC community, as I said before, in Africa is very, very small. You find that I think all across Africa you have less than 20 perhaps in a venture capital fund where the needs are enormous.
If a small enterprise approaches you, what practically are you able to do?
We would see, first of all, if there's a fit. Does this enterprise operate in one of our sectors of investment? Two, we try to understand, because we're an impact fund, we also try to understand the social impact and where we think that this particular business can be disruptive. In doing something in an industry that, pushing the envelope a little bit, particularly leveraging technology, because we have, our founders have a strong technology background. But we would spend a lot of time also assessing the trends and the dynamic in the market where this business is operating. For example, financial inclusion is an area that is evolving extremely rapidly, particularly in Africa. We're seeing that very often, the solution or the understanding of what's going on in that market are just not out there. So we need to do a lot of primary research, interview a lot of people, recoup different pieces of insight to try and make sense of where, or have a point of view of where we think the industry is going.
Malik, thank you so much.